Thomas, thank you so much. You are joining us from Plug and Play Tech Center, VC. You're involved in so many different things and kind of building the largest innovation platform on the planet. So I love that focus. So great that you could join us. We'll wait for a couple of other amazing panelists to join us. And the topic today is startup funding. Of course, that's my favorite topic because I believe it's very important that startups are funded correctly, and startups also know how funding works, because without that, you cannot scale your venture. So it's very important for you to know how the funding side works. The purpose of this session is to introduce you to the leading VCs, investors, and funding organizations in the Nordics to kind of figure out like what's the best way for you to pave your way as a startup founder. So thank you so much that that everyone one is here. Carl-Henrik, you're joining us from Almi. Terhi, you are joining us from Helen Ventures. Max, you're joining us from Snow Ventures. Jørn from Katapult, and Thomas, you're joining us from Plug and Play VC. Let's do a quick introduction. I think let's start there. So my request to the panelists would be if you could introduce yourself and your organization in about 1 or 2 minutes. And we start with, let's say, Carl-Henrik, if you would like to go and talk about Almi and yourself.
Yes, and thanks a lot for being a part of this big event. It seems to be a very hectic agenda for the day, I can see. So great. Thanks for being here, and we'll talk a little bit about Almi, and I will not talk so much about myself because I'm only one of the collaborators that should do as much as possible for the entrepreneurs in Sweden from Almi's part. Almi is a governmental part, and we are our holding and mother company is owned by the state, the government. So we are, in that sense, we are owned by 100%. But in the regional part where I'm sitting in Stockholm and Sörmland, we're owned by 49% of the regional owners. And it's the same system in the whole Sweden. We have 16 subsidiaries in the Företagspartner, and we have also the Almi Invest, the venture capital company, where we are having 8, or to be exact, 9 different Almi Invest companies working with venture capital in quite early phase. Almi, where I'm sitting in Företagspartner, we are offering a unique combination of financing and business development. So that's our main goal. And as I said, Almi Invest, they're of course doing the venture capital part and trying to invest in businesses. If I should say something about Almi, we in Almi Företagspartner, we are, I should say, a factory, a sawmill. We are doing a lot of things out there, really producing a lot of efforts to help entrepreneurs to fulfill the dreams of starting and developing companies. So it's important that we are both in the start phase, but we are also in the expansion phase. So we can easily say that we are heading for almost all industries and in all different stages of a company's life. And it means also that we have loans from the smallest micro loan to quite big ones, actually, which is growth loan and green loans nowadays. So, and it could end up with 15 million Swedish krona, and the micro loan could be 100,000 Swedish krona. So this is the big differences in what Almi is doing. And one thing that is also important to mention right now in this short introduction is that we have a special focus in women and persons with a foreign background. And the next step for us is that sustainability is one of our main goals during this the coming future, well, from now on. So all the companies coming to Almi, they have to go through our sustainability workshops and things like that. So it's quite important for us to have that, and we are also a quite big channel to discuss sustainability and diversity with all our customers out there. That is shortly about Almi. I'm at the head of Almi Företagspartner Stockholm Sörmland, so that's the only thing I have. Almost 65 collaborators in Stockholm and 15 in Sörmland, but in the total we are approximately 500 employees in Almi.
Great. Thank you so much for the insight. Love the work on sustainability, female founders, foreign founders, and the green loans that you talked about. One question beyond that, how well spread are you in Sweden? You said you are 60 people in Stockholm and then close to 500. Is it that you are regionally represented in different municipalities? How does that work for
Yeah,
our audience?
absolutely. We're situated and we are placed out there in actually 40 different offices in Sweden. So we have quite a lot of offices out there to reach out to for all the entrepreneurs out in Sweden. Unfortunately, I must say that we have what I can understand quite a lot of international viewers out there, and unfortunately we are only for Swedish companies, so we cannot help companies from Denmark or Norway, or not from India or from elsewhere. It's only Swedish companies that we can help actually in Sweden. But if you're starting up in Sweden, then we can help you. So
okay, I'll borrow like 20 more seconds. Being in Sweden means that the company needs to be incorporated in Sweden, but the founders could be spread in different places.
Yeah, absolutely.
As well, depending on. So that's just for the clarity of the audience. The company itself needs to be incorporated in Sweden for them to be getting support from Almi. But let's move to Helen Ventures. Terhi, if you could talk a bit about what you are doing, the awesome stuff on the impact side, would love to hear.
Fantastic. So first of all, thanks for having me here. So this is a very exciting panel. Looking forward to the discussion. So I'm the founder and head of Helen Ventures. And Helen Ventures is the investment arm of Helen, the energy company in Finland. So we have a sector focus. We only invest in startups which are focusing and working on solutions which can be applied into the energy sector. So largely looking at solutions like climate tech solutions, sustainability solutions, digital energy solutions, e-mobility solutions, and like overcrossing perspective for us is looking at digital business models. So something which is fast to scale and build. And in terms of the geographic focus, so we go across of Europe, so not only in Finland nor only in Nordics. Actually, the biggest part of our investment at the moment is in Germany. So we go across Europe plus Israel. And in terms of the phase, so we like to see something where you have a product market fit. So you could say plus minus Series A is the sweet spot what we are looking for. Occasionally, we also look at strong founders in the seed phases. So that kind of is the sweet spot what we are talking about. And the ticket wise up to 3 million as an initial ticket. So that in short, Helen Ventures and what we are doing.
Thank you so much. Could we discuss a little bit about how big is the portfolio right now and what are your current priorities going forward?
So we have now 10 companies in our portfolio. So looking at companies who can really bring the energy transition and the climate tech solutions forward. And very happy to hear more about that kind of startups if they are in the audience.
Awesome. So the startup listing there, Helen Ventures is not only Nordics. They talked about Germany, Europe, Series plus A plus minus, and 10 companies in portfolio, focus being energy and climate tech. So if you're building something, yeah, that's the place. Great. Max, can we start with Snow Ventures? We had Snow Ventures mentioned from Siv Anderson when she delivered her presentation on Oslo Business Region. So great work that you're doing in that place.
Yeah, thanks. Thanks for having me. Looking forward to today. So yeah, I'll give you, I guess, a little bit of background on Snow Ventures. We're a pan-Nordic fund, early stage fund based out of Norway. And I guess just to refine what that means for us, we're actually open to companies that are incorporated in the US, for example, but just have a significant Norwegian or Nordic association. So that could be a Swedish founder who moved recently to the US even and incorporated his or her business there. But so yeah, we're investing early stage. We're investing out of our second fund. We've made 9 investments out of this fund so far, pretty evenly spread throughout the Nordics. We have about $100 million in assets under management, and we're backed by folks like Peter Thiel and other sort of global investors across primarily across the US and Europe. And that's a big part of our strategy, is to build those networks with folks around the world, to connect them to the Nordics and also provide a good platform for Nordic founders to reach the rest of the world. So we see ourselves sort of as a gateway, kind of in and out in both directions. We are non-thematic and sector agnostic when it comes to the investments we make. So we're wide open. Anything really we say within digital technology. What we're really looking for is big, bold ideas coming from ambitious founders. And I guess we can dig in on the panel in terms of what that really means. But yeah, I think that's us.
Very interesting. Sector agnostic, digital tech, Nordic focus, and big, bold ideas. Yes, we are diving into that after two more introductions. Jørn, if you could talk to us about Katapult and the amazing work that you guys are doing there.
I'd love to do that. Hey, everyone. Thanks for having me. It seems now the only company we don't share portfolio with is Max and Snö. So we need to step up our Web3 and all other things game. Folks, Katapult is investing in global seed stage climate tech. That's what we're excited about. We're excited about that because climate change is real, and it's also going to be profitable to fix it. We built a model for that. So what we do is work with companies that are at seed, is what we call it. Typically, these companies are valued at between 5 and 20 million euros. So we're a bit later than typical accelerators, but that's because we offer a certain kind of product. You know, we're perfect when you are, let's say 7, 8, 9 people in your team. You have a few months, maybe a year worth of commercial traction. You have something that is working, but you now need to internationalize, accelerate. You need to quantify your impact. You need to understand your business goals and set milestones for the next 3-4 years of fundraising. This is what we do. That is the Katapult product. We've applied that now across 115 companies since 2017. So we're sort of growing up and becoming a bit more mature ourselves. We'll make a total of 40 investments this year. And my focus is on the 24 climate investments we'll make. 12 of those are ocean and 12 of those are non-ocean, but all of them will have a climate impact. And I encourage everyone who's building something like that to talk to us. My background is not in that. I used to run a startup, but I was in music tech. And I recommend that only for the people who really want to learn how painful it is to run a startup. But it was good learning. So that's a bit about me and a bit about Katapult. And I'm excited to be here. Thanks, Naimul.
Thank you so much, Jørn. You have been with me on a couple of other events. It ends with the music. So I love it. We still haven't done a jam session together. Should be doing that. But what I also love is, I remember Carl-Henrik, we had a panel around a year ago, and in that panel as well, collaboration suddenly started happening. So really hopeful that Katapult and Snow Ventures and there could be collaborations building over here. We want to enable that going forward. And also
we also want to get that Peter Thiel money, just to be clear. So if Peter Thiel wants to LPR fund, you know, the book is open, not solicitation.
Maybe he's in the audience today. You never know.
Great. But also like the clear focus you have, like we're going to be investing in 40 and then 28 are going to be over here on the climate tech. So thank you for those words. We turn to Thomas. Tell us what you are doing at Plug and Play and what is Plug and Play to our audience.
Hi guys, thanks a lot for having me. Super excited to be here. It's also nice to see familiar faces. Actually, it's a great coincidence because exactly 1 year ago, I was flying to Stockholm for the first time. So, you know, thanks for the invitation. Really looking forward to this amazing panel. I'm Thomas Bigagli. I'm Ventures Director at Plug and Play EMEA. I'm actually French and Italian. I'm dialing in from Paris, but I should be coming to the Nordics in actually 2 weeks from now. I started 4 years ago and I contributed to the launch of 10 offices in EMEA, and I'm working really hard in opening 4 offices in the Nordics within the next 6 months. Now speaking about Plug and Play, let me start basically with the story. I don't know if you're aware of that, but Plug and Play started back in the late 90s. It's a family business, right? Run by Saïd Hamidi. And Saïd Hamidi had a great idea back then because he had a building in front of Stanford to turn it into a startup campus. I mean, back then we didn't call that a startup, right? It was a tech early stage company. And he was lucky enough, this is why he called this building the Lucky Building, to have as first tenant Sergey and Larry that launched Google in this building. And right after, he had the chance to host amazing additional startups such as PayPal, Google, Dropbox, Danger, Lending Club, etc., and started obviously investing in it. And in 2006, he then created the legal entity Plug and Play Tech Center, right? And why after is because he had his first return on investment, and he bought the old HQ of Philips Electronics, right? So his ambition was bigger. We had a huge building that is still our HQ actually. And now our activities rely on three main pillars. So we are still a VC fund. We are one of the most active in the world. So investing since 5 years in more than 200 startups per annum. From pre-seed to Series A, we have different vehicles, as you can imagine. We are a strategic investor. So our ticket size, they are from 50K to 500K. We never lead rounds. On the other side, we started in 2012 some innovation consultancy. So we started, supporting large corporations to boost their digital transformations by using external technologies, startups. Now, of course, our model evolved, but back then they started like that, right? And when we were matchmaking startups and large corporations on specific pain points, we are still actually doing that for free. We don't take equity. We don't charge startups, right? Large corporations are actually paying us for that. And lastly, that's the acceleration part that I just mentioned. So the startups, by helping them, we call that accelerating them. So our definition of accelerator is actually sourcing a great technology that could be beneficial for large corporations, then matchmaking them together and supporting the trial phase, so the POC, until the implementation. And right now we are active in 50 offices on 4 continents, and we are roughly 900 employees so far. Thanks a lot.
Awesome. We should catch up when you are here in 2 weeks. That's the first thing. The second thing is that I gather, how would you then classify? Are you then a platform, or what? How would you classify the entity Plug and Play? That's one question.
Great question. I would say we are, one of the largest open innovation platform in the world. We are the middle of all of the value chain because we collaborate with all of the main stakeholders, right? So universities, other VCs, of course, and investors, large corporations, innovation centers, etc. So we are really at the forefront in the middle of innovation. And of course, again, we rely on these 3 main pillars that are accelerators, innovation consultancy, and VC.
One last follow-on question, and then we go into our panel discussion. You talked about 50 to 500K and never leading the rounds. Does that also mean you don't follow on, or do you follow on?
Actually, a great question. We do follow on and do pro ratas. And this is also why we, launched lately, and we will launch more and more later stage funds with corporate LPs. Because back then, Plug and Play was investing mainly through several family, the family money, the Amity money. But since 2 years, we launched our first fund in InsurTech. Then we launched a sustainability one, a brand and retail one, a fintech one, a supply chain logistic one, etc. And we will launch more and more. And LPs, we have a PVH, for instance, in brand and retail. We have the Walmart and the Walmart family in supply chain and logistics, etc. Okay,
great. Let's jump into questioning round, and I'll scrap my questions because somewhere somebody said, Max, you said bold idea. So let's take it from there and try to build an alternate stream of questions. So I'm very interested in knowing from each one of you, like what are you looking for in startups when you are funding? Of course, since you are working in different levels of the entire funding value chain, for example, Carl-Henrik, you're working on the loan side at a very early side. Helen Ventures is working on the climate energy transition. You are working on the climate tech. Katapult, you're more generalist, Snow, and Plug and Play is more like a platform kind of the element in between. So if I ask this question, what are you looking for when you want to fund a startup? Because this is a funding panel. Yeah. Anyone can start. It's open.
Ladies first.
Okay. I'll go for it. So I think our answer is very simple, and I think most of the startups have heard it before, but those are the fundamentals, what you should deliver. So there's basically three things. There's a traction, there's a team, and there's a market. And all of those need to exist in a good way at the same time. So that's the sweet spot. And when looking at it, of course, everybody knows that that great ideas and great problems and solutions for those tend to happen. So people see the same things, smart people see the same things at the same time. So the idea itself, even though you think that you just discovered it, most likely somebody else has discovered that as well. So it's all about execution. And when you go into execution, so of course, looking at the team who has a tendency to actually go into making it happen, learning from the market, making it happen, but then also showing it, so demonstrating it through traction so that you have actually customers paying for it. And of course, the old saying, so the money will come to those who have the money. So that will happen. So then you can prove that you know the product market fit is there and you can show it. Then of course we can help you to boost it even further. And then lastly, so of course it makes sense to work in the industries which actually matter. So for us, for example, looking at a climate tech, so it's such a huge problem. And when you have such a huge problem for a startup mind, that's an opportunity. So thinking of something where you actually can make such a big difference and people are desperate to need the solutions and you can help them out. So of course you want to work on something where that market is big and large and scalable, so that you have a good baseline to build on. And of course it's beneficial if the market is rapidly growing. So there are opportunities to do like transformation of the industry as well and that kind of things. But anyways, the market needs to be large enough, because when you slice and dice and go into the market, you most likely realize that even though you look at a multi-billion-dollar opportunity, when you actually start going in there, it gets smaller and smaller. So you need to start from something which is big and meaningful. So these three things, traction, the team, and the market. And the one which people mostly miss is the traction. So I think for the American startups, it tends to be more obvious, but for the Nordic startups, the idea itself is nice, but if you can show the traction, that makes a huge difference.
Awesome. And I love that. Love the words that you said, building something big and meaningful. And of course, traction, of course, your focus is also on plus minus seed, where tractions become more important. But let's switch to Thomas. What's your take on the question?
Really good question. Actually, at Plug and Play, we invest, we are industry and location agnostic. We invest 99% of the time in software businesses. We can do sometime hardware, but it's really rare, frankly speaking. And we mostly invest in B2B due to our strong portfolio promises. As you know, we have such a network of large corporations, and that it makes more sense. But we do B2C. I would say half of our unicorns are actually B2C. What I think is important to mention is, because we are location agnostic, it might be misleading because we have offices a bit spread around the world. But actually, when Plug and Play is opening an office, it's mainly for our innovation consultancy services, right? So we will have investors that will be sitting there, but the investors sitting there can invest actually anywhere in the world. So I think this is quite important to mention. When it comes to what we are looking at as well, so of course, the market, the team, the pain points and how they address it with their solution, as well as their unique value proposition for us is key. But as you know, we invest from pre-seed to Series A, so tractions, yes, is really important. Don't get me wrong, although at a pre-seed level, it might be hard. So we will challenge the startups not on the tractions on the pre-seed level, but more on how they have been co-building this solution, using a product growth and design thinking approach, for instance, right? So I would say tractions, yes, definitely better, but sometimes, at a pre-seed is quite hard. So we have other ways of challenging the entrepreneurs on that side.
Very interesting point. You talked about software business being location agnostic, and then since you operate on quite a broad range, wide range, so with very early stage startups, you're saying that you kind of challenge how they're actually building the startup itself, and traction metrics are not in place, not set up yet. So great points over there. Let's switch to you, Jørn, because of course you were very clear about the targets that you have, let's say 40 investments, which essentially makes me think that there must be a huge pipeline that you guys are working with. So question is, when you have a pipeline, how do you work? How do you make selections? It's a slight branching off of the same question, like what startups you select, but I want to understand how the logic works that you're saying.
How in the world do we do that? I have the numbers. We looked at 1,902 companies this year, which is a lot. I'll state the obvious. And in order to get through that, well, our model needs it. We need to actually look at enough companies to be able to get to, in the case of my fund, 24 great investments. So to get that confidence, we speak to and analyze and due diligence 250-ish companies, and we have tabs on 1,900 plus companies. The whole point of this is that we need to go and actively look for them. If we lean back and wait for applications, that's not going to be enough. We need to actually go out and find them. So how do we select? Well, I can tell you that we right now have a research program going on that is publicly supported as well. We do this in collaboration with a couple of other organizations to analyze how we select, because everyone is biased. You cannot escape that. What you can do is probably increase awareness of that and try and understand and inspect your choices. And so that's what we're trying to do, looking at our selection criteria. Personally, my list from the top is, I'll mention the obvious. If the team is not exceptional, nothing is going to happen. So yeah, you need to be in an impactful space, probably in a market that is growing. At our stage, we invest in mainly post-revenue companies. So you need to have some traction. Traction can also be an exceptional paid pilot, or just a technology readiness level that is attractive in a space that is really, there is a bottom level to how cheap a company of 6 exceptional engineers working on a deep tech case can be. That is an expensive company. So you're never going to get that at 3 million valuation. But if the team is not great, then nothing else will happen. So that is why we always talk about team, because, they're the ones that are going to sell. They're going to recruit talent. They're going to surmount insurmountable challenges, all these things. It's just super hard. And if there's one thing I wish for everyone to take out of that, is that the respect for founders being able to go from that 0 to 1 is just, that is the most exceptional feat. Actually getting someone to pay for the thing that you produce, to like the thing that you put in the market, that is exceptional. That's what we need.
Awesome. You mentioned a very strong pipeline, 1,902 companies. I was reading, I think that's Nordic is kind of working with a similar kind of pipeline with their impact accelerator. So great that that indicates that there is so much work happening at the entrepreneurship side. So imagine the quantum of innovation, impact, and imagination that's already there. So great. If
you look at the market right now, everyone's kind of reeling in from 2021, which was pretty wild. It was cool, especially for the ones that, and I include myself, that didn't invest 20 years ago. It was like, oh, that's what it was. I get it now. Although it's hugely different. But the point is that this market is still tiny compared to all of the other markets out there. Look at the financial markets at large. Look at all the capital that is moving and slushing around here and there. If you look at the amount of financing and talent that currently goes to entrepreneurs and startups, it's just tiny. The market is much, much larger. And look on the other side, if you take the top 10, 20 companies that are growing for the past decade in every country you want to look at, what kind of companies are they? Well, aside from utilities, you have startups. and startups is it. That is actually the prime value generation method that's been used for the past 50 years. So this is the way to create great companies, and we're allocating a tiny part of our resources to actually doing that. I'm pretty bullish on this method.
Okay, brilliant. I'm split now. Should I put a question, because it's a branch question now? Max, should we go into how you were discussing the bold ideas? I wrote it here, but then I wrote 3 other things on top of it, because only have 1 page over here. So if we can go on that side, maybe talk some soft factors, or however you want to answer that.
Yeah, sure. I guess, yeah, we've now invoked Peter Thiel several times with the funding, the 0 to 1, and I guess I can do it one more time. So I used to work for him for the last 6 years or so, and so I'll borrow from him again. And you know what he would say around this, and I think is true, is we're looking for folks that are building a business around a secret or an important truth that others in the world don't realize yet. And so maybe that's a way to sum up, you know, what we mean by bold ideas. But beyond that, I mean, I agree with what everybody else has said in terms of what else needs to be in place for people to actually pursue and execute on those ideas. It's not quite enough that someone has this idea. It has to be the right team. It has to be within the right market. And then we also look at sort of defensibility and moats around that idea and around the business. Yeah, I think that's kind of how I give sort of the soft factors around what we mean by bold idea, and sort of what does the company look like around that idea.
Understood. Great thoughts. Carl-Henrik, if we come to you, you are slightly different from the VC world that we're talking about. So you're working in a very interesting space of loans, of business advisory support, and in some cases validation money, which Almi. So how do you assess who to give out money to? Like, what do you look for in the founders who are coming to you? Well, maybe that's too broad because you are in several business legs. So, but I'll still float that question.
Yeah, it's a very good question, of course. Since we are all over the space, as we say, in some way, still we have to be quite aware of where does our money come from, and it's from our taxes. Actually, I pay the money that we lend out to the entrepreneurs, so we have a respect that is quite high actually regarding that. So as the rest of you are talking about, is the same for us when we are looking at the loan situation. It's the entrepreneur, the team behind it, but many times if you're in a very early phase where we can go in and finance with a loan or innovation grants also in some way, then it could be only one person, but still we're looking at this person. Will this person have the possibilities, the courage and the curiosity to take all the steps that you have to do to be a good entrepreneur? And then of course it's the own effort from this entrepreneur is quite important, that you have put in your own, not only money, but it's most of the in the most of the different times it's the time that you're putting in there, because you put a lot of time as an entrepreneur into this. But then I can also come back actually to the sustainability, that it has to be business concepts nowadays that is have a thought regarding sustainability. But it doesn't mean that we can't put out loans to a restaurant, because I mean, we can do that, of course, to a cafe also, but as a cafe owner and entrepreneur in that sector, you have to think about this sustainability and what you can do as a coffee owner to fix that. And then of course we have, I mean, we're going to the most high-tech companies also that are having the next idea that I can guess that both Jørn and Max and Thomas and Terhi would like to invest in, those most high-tech. We will be there also, so we have the possibility to look at all the different phases, all the different industries, and then we go down to the main thing, the person behind the company actually, that we are trying to look at. then for sure we're looking at the economic plans, budgets, whatever. That's something that you have to have on place in all kind of financing nowadays. Then we come to the I don't know if all the venture capital companies has the KYC thing going on, but we of course as a governmental part, and we have the Finansinspektionen in Sweden, also that we are have when we're talking about money laundering and things like that. So we have a KYC doing on all our customers, and then that's for both for the customer, it's for us, and it's for safety for the society, that we are putting out the money to the right persons actually. So usually we say that it's for the entrepreneurs, that it's important that we do the right thing and put the money out to the right persons. But so it is. We try to be. We're doing in Stockholm, Sörmland, 1,000 loans per year approximately.
Okay.
It was 1,600 during the pandemic year 2020. So it means that we have. It's only in Stockholm, Sörmland then. So we have quite a lot of action regarding those loans, and then we say no to like 400 or 500 applications also. So we that's how it is to be on Almi.
Well, great, a massive quantum you have, and it was also there in the pandemic time. I got a question here from the audience here. I got a direct question here. That is, how well does your VC arm work with the Almi arm? Because you have a traditional funding model, and then you have a VC funding through Almi Invest. Do you, as two organizations, because entrepreneurship is more like a journey, do you handhold them, or is it the two windows of operations? How does it work for Almi?
It's a very good question. Since we have very high confidentiality at Almi, we can't stand the companies just back and forward between us, because it's important that the customer is the important thing, that they allow us to do that, of course. But otherwise, I mean, as a venture capital company, as Almi Invest, they have for sure, they're more selective, and they're doing like perhaps 40, 50 investments per year in Sweden. They're doing 5 to 10 investments in Stockholm area, I can guess approximately. They have 370, 380 portfolio companies. So Almi Invest is a very big investor in Sweden, and even if you compare with in the Nordics and even in Northern Europe, I think they're quite big in investing. So, but of course we have good cooperation with Almi Invest. If we find, or we will have an application from a very interesting company, then we are talking to the company, and then we are talking to Almi Invest, and then we're putting them together. And we also have the business development part, that we are helping each other with this business development for companies that are in Almi Invest's portfolio. We're trying to help them with business development. But for sure, as Per Hedberg from Sting, they have quite a lot of different companies in Sting. I think from the Almi Företagspartner part, we are in 80 to 90% of those companies has some kind of contact with Almi. So it means that we are quite eager to be there and to help the companies in early phases. And if that is enough for the venture capital part, that's only Almi Invest can say that.
Okay, great. Thank you so much. We jump into two last questions, and I'm trying to see if we can do some rapid answers on this. One is that there's a lot of discussion going around on the global funding scene. It came out when we were discussing this with Helen Ventures around a couple of months ago in a Founder Institute session. How far is your organization impacted, or you see the work in your area, particular area, is impacted with the global trends that we see in the VC industry, especially? So anybody can so we can have a quick catch up on that, and then I have a last question for the panel.
It's fair to say it's tougher, right? It's a bit tougher this year than last year. So great companies will still get funding. They will always get funding because there is always money. And one good thing to remember for every entrepreneur that's building right now and looking at headlines, well, there were a lot of VC entrepreneurs building last year and the year before, and they have relatively fresh bags of capital that was secured, funds that were raised last year. These are now ready to be deployed and invested over the next 2 years. And yeah, Maybe for some of the immediate follow-ons is going to be tough. Maybe for emerging fund managers that invested all of their money last year, it may be tough, but we just don't know. We don't know the size of this market. We don't know how big the opportunities are. Part of this game is like, we get paid to be patient, right? It's a 10-year horizon for most of these things, plus minus. So there is capital moving around, and you will get funding. But it's tougher if your company is not a clear-cut case. And so that's why we always encourage everyone to just, now is the time to really manage your runway, because everyone now looks at different factors. How alive is this company in 6 months, 9 months, 12 months? If you're now, if you have less than 12 months of runway and you're trying to grow, and you haven't really found a set of unit economics that work for you, that can scale, well, it's probably going to be painful. You need to fire people, and probably right now. That's that's the rule. But we invest. I see others investing at a pretty decent frequency. So for great companies, no problem. For bad and mediocre companies, it's going to be a bad year.
Okay, so for great companies, no problem. There's capital around. Marvin was also, when he connected from San Francisco in the morning, he was talking about a lot of dry powder even in the US market. So good to hear that. Any other perspectives here?
Yeah, I think on our side, what we've seen during the pandemic back then, all of the VC funds back in March 2020, they basically stopped investing, freeze their pipeline, and they were focusing on the portfolio management, right, during a month. But then they actually realized the startups were doing great, so they started investing again. And the VC game started becoming more and more famous. You had more and more VC funds that got created. So, 3 years ago, as Jørn was saying, the lifespan of a VC fund is actually, some years, 8 to 10, some years. So don't worry, you will still have some VCs that will be interested to potentially assess you for an investment opportunity. And on top of that, what I think was really interesting as well during the pandemic is that because the access to deals was harder and harder, all of the VC funds that were investing later stage started raising funds to invest in earlier stage, and vice versa, right? So we are a great example, actually. We were early stage VC funds, now in 2 years, we launched 5 later stage funds focused on specific industries, for instance. And the second point I wanted to raise, where I totally agree with Jørn, is at the end of the day, great startups will still be able to raise. Just VCs will be more and more cautious when it comes to metrics. So, last year or two, your valuation were based on your ability to raise money. Now, it won't be the case anymore. They will be based on mostly tractions. So bear that in mind. And again, I think it's going to be easier for new startups, actually, that are starting now and trying to raise in the future, if they are great, than for the startups that get overvaluated and then needs to go one step down.
Okay. Great points. And I'm writing here, metrics and discipline are the 2 key themes for startups. If you're building a startup, you need to be disciplined and kind of build it like a business and not a funding machine. So great points. Any other comments before we move to the last question? Yeah.
Maybe just to mention that, as discussed by Thomas already, that early phase might be easier. So in a growth phase, profitability is becoming fashionable. So then being able to show that you have that capability and then get the funding to gear it up further versus being default dead as looking at it. So I think that's one thing to look at. So that how can you prove that kind of things if you are more in the mature state? And then I think that also the difference between different sectors. So some of the sectors were more hyped and maybe overvalued than the others. And also in some sectors, like if you look at the energy tech or climate tech, where all these things which have happened in the past months have made the energy sufficiency and capabilities to build there even more important. So in some cases, actually, this is the best time ever to build something which can solve that kind of issue. So there are all these customers who actually need it. So I think there are also tremendous opportunities in this kind of times as well.
Great point. I think that resonates with if you're a great company or a startup, you will get funded. And if you're operating in a sector which is like in the sync of time, I think that's where. So great points over there. Let's round off our discussion in the last 1 or 2 minutes. If people need to get in touch with you for their funding needs or startups, what's the best way to connect with you? Is it a website? Should they send a pitch deck? Whatever. So let's take a very quick round on that, and then we close the panel.
I can start then from Almi's part. Of course, it's a web page that is important to, you can find all the information there. But I also need to say that Almi, when some of you are backing off the market, and it was so during the pandemic, then Almi has the opportunity to step forward actually. So that's our assignment to do that. We should be in different economic situations. We can act in different ways. And in this sense, we are stepping forward. Of course, if the economic situation getting less good, then we are stepping forward. So that's for the people to know that we try to help quite a lot of different companies. And of course, if you have you have to have the possibility to survive, of course, otherwise we will not put money in there. But we do that analyze as all of you are doing. So that's for sure. But the website, or you can always contact me also for sure.
Great. How does it look for Helen Ventures? You are operating at the plus minus Series A. If founders need to get in touch with you, is it some warm referrals? How does that work usually?
We are happy to have a direct contact, so it's fantastic. On the website, you find all the details. Our joint email is hello@helenventures.fi. So send your pitch deck. We're happy to look at it.
Okay, brilliant. Anything from you, Max, and Jørn, and then Thomas?
Yeah, we're each of our first names at snow.vc. And all of our emails are on the website. And I think, yeah, best just to email directly with a pitch deck and sort of an explanation for your company and what you're looking for. And yeah, I guess I'll also say that we're sort of very much forward leaning at this point. We're closing an investment this week, and we've continued to invest sort of through the summer and through this market downturn, if you want to call it that. It's hard to differentiate between what the slowness of a Nordic summer versus a market downturn. So I'm still kind of learning what the normal Nordic summer feels like in terms of pace. But yeah, we're sort of moving ahead and investing as we did before the downturn. So please feel free to reach out.
Got it. Thank you. Jørn, any point from you in terms of if they need to reach out? 1902, you said?
It's in the chat, right? So you can actually call me or email me or do whatever. Don't climb through my window, but outside of that, everything is fair game. It's easy to get in touch with Katapult. We will invest this year and also next year. So tell us. And if we're wrong, tell us, and just hand over some feedback. It's time to send it this way as well, not just the other way.
Got it. Thomas, any last thoughts?
Yes, of course. On our side, you can reach out to me on LinkedIn or on my email that is in the chat. We actually, and I will encourage you guys, it depends, of course. For Almi, it makes a lot of sense for you to apply on a website, but generally speaking, top VCs, they source proactively and they exchange a lot with their peers. And, they review a lot of applications. But if we have other trust VCs that is quite renowned with who we are sharing some deals, we may tend to try to do something together and invest. So what I would recommend you is to try to get in touch with, few VCs that will then introduce you to some others, rather than you reaching out with cold emails everywhere. Frankly speaking, that will be my best advice. And feel free to reach out to me on LinkedIn or by email. And I'm traveling a lot, so you won't find any windows. Sorry, but maybe I would come to yours.
But jump on the same train as you, maybe.
Yeah, exactly.
But we are catching up in 2 weeks. But great, thank you so much, Jørn, Max, Terhi, Carl-Henrik, and Thomas. Great that you could join us and discuss these amazing insights. I think a lot of value going out to founders.